Yo. So today, man, on this video at least, we're gonna talk about why banks will deny you with good credit. And it's real simple. It's because some banks will deny you even if you got a 740, 780, and they'll approve somebody with a 660. And why? Because you can look good and say that you pay your bills on time, but it doesn't mean that you can afford the actual payment. And simply, why? Here's one reason. Your debt to income. Debt to income is how much of your income is being paid to debt. What that look like? Car loans, credit card, student debt, stuff like that. You may even have another property. If you are, if you are, if you stretch debt wise, they want to prove you. You know what I'm saying? No matter what your credit score is, because in their eyes, you're too much risk. You can't really afford the house, so you will get denied for that. What other reasons? Choppy employment history or income history. I had a lot of self-employed people that they may have said, "Well, I made this much on paper." Then you get a tax return, and they're writing off all of this stuff so they can have a lower tax bill. But then the underwriter or the lender is looking at that like, "Well, you didn't make any money." We'll do another video about that. But or you may just get a job and only been working for 6 months, but you didn't work for 2 years, and how long are you gonna be there? What's the stability of it? Are you hourly? Are you salary? So there is another reason why they may deny you, no matter what your credit score is. It doesn't really matter. Um, what's another reason? Well, wrong product type for the house. Maybe you're trying to buy a fixer up and you're applying for a conventional loan and they not gonna do that. Or maybe you saying that you in a maybe you were saying that this is your primary house, but it's really gonna be your secondary house or your investment property. Well, they're gonna be like, well, we cannot approve this loan because we find occupancy fraud or whatever. There's various different reasons why you can have the good credit, but you also will get denied. Because for real, it really ain't just about the credit. Uh, that can kill a loan. There's many different things, but those are the oh, I forgot to mention. This is another one. It's another one right here. This is a good one. I'm gonna talk about this on um, investments too. But your reserves, there's a lot of down payment programs, a lot of things that are allowing people to get into the home. But if some lenders have a reserve requirement, what is reserves? It means after closing, after you pay for down payment and closing costs, how much are you going to have in your how much is going to be actually into your account? So if they need 3 months worth of reserves, that means they need 3 months of mortgage payment. So if your mortgage payment is $1,000 with everything, that means they need to see $3,000 in your account after closing. I'll touch on a lot of this stuff more. I honestly just wanted to make a quick video, but this is the type of stuff that you need to know going forward. That the credit score is not the only thing that can not the only thing that can qualify you for a loan. There are other things that you have to think about. So don't just think about credit score. Think about the whole picture, and not just one thing that make the picture. But it's a lot of different things. So those are the things that will kill your deal.